Slim, welcome back to Face, buddy.
Hey, I'm here.
You are, and your arms are crossed. So what's your body language saying? So I want to welcome you back, Steve, to our community. Thank you for taking time out. You want to share your screen, and I have a few questions for you.
You have questions for me. Okay, well, that's great.
Or,
Yeah, I can
yeah.
share.
All right. So let me ask you, buddy, is this meaningful? What happened in the stock market the day after Thanksgiving? Kind of a surprise attack for it to happen when most people were away. So
Yeah.
curious what
Do
you're
you want me
thinking.
to share my screen and put up charts yet? Or
Yeah, you could do that.
do you see my chart here?
Yeah. Wow.
Okay.
Yeah, I do. Yeah, all your cycles and everything.
Right. We're just briefly for those people that are new to what we do. We're cycle
Okay.
analysts. We look at
Okay.
the rhythms of the market. And there are three major components to our analysis. It's the cycle analysis, and those arcs that you see in the bottom are a drawing tool that help us see those rhythms in the market. The momentum indicators that we use are called either the reversal scout, which is this line right over here that you see, or the slim ribbon, which is here on the daily chart, and our swing high, swing low analysis, which gives us the support and resistance areas and our targeting. So your question was about the stock market and what we're seeing right now. Is that correct?
Yeah, that's right, Steve.
Okay.
I mean the bet. You know how everyone says for the last decade or so, BTFD. Every time,
Yeah,
and they
that's
get bailed.
correct.
Okay,
Right.
so
And all
are
of a
we
sudden
there again?
that's starting to change a little bit, right? As we
Yeah.
see this, you're looking at a couple of years of cycles right in here. As we look at the weekly chart on the S&P 500, and each of these yellow oval periods that you see are the corrective periods in each of these cycles where it's expected to be a decline. And the reason for the mild declines that you have here is that the dominant energy, which comes from the longer term or the monthly pattern, has been so super strong. And that has prevented these corrective periods. Now, each of these cycles are approximately 22, 23 weeks long. And that's how these measure out. Now, we were looking for a correction right in here. And I think one of the few analysts that was looking for a declining phase in late November and mid-December. You see that note there, period of risk. From mid-November to December, we were looking for this decline, and we suggested it would be about 4.5% to 6%, and that's what we're getting.
Most people were talking melt up, Steve.
Yeah,
for the month of December, so
the patterns
everyone was embracing that.
The patterns were just not suggestive of that, and it was more likely we were going to get down into these fib supports over here. We thought it would get under 4,500 with a decline of probably 250 points, and then get into your Christmas rally. More favorable seasonality. Now, interesting, you're getting this decline during a period of favorable seasonality. And, I think everything about the news about Omicron that's come out, I think it's really a false flag. And the reason for that is that, when you get a decline like this and actually a free fall nature that we've seen, it's because the market had susceptibility to it. Almost a 2 times valuation to GDP, historic, every other measure, historically high valuations, and still people were bullish for the very long term. Now, you can see in here our analysis is suggestive of the fact that there is likely going to be a rally into the early part of next year to take out those highs once this decline is over with. But our longer term analysis is suggestive that the peak for this entire bull market will be in the first quarter of next year, and that there's actually a fairly significant decline coming next year. We have been talking about 22 being a bear market year, and we still believe that to be the case, even though the probabilities are pretty high that early in the year we're going to make a new high. I just think that there's been a tremendous amount of deterioration underneath the market that we've seen, and of course being held up by the action in the mega cap stocks. And now Apple has turned to crap, as you can see. This is the daily chart with our cycle analysis analysis on there, and a very key level that we were showing right in here when it broke underneath that corrective low, and that our momentum had gone from, this is the slim ribbon PO, it's a proprietary indicator that was green and giving bull signals, and now it is neutralized for the first time in many months. So momentum conditions have deteriorated very significantly when you look at that. Now we're looking for a low of this cycle to occur in the next 4 to 7 trading sessions, and then get into that more positive period that aligns both in this daily chart and the weekly chart. So these charts are available. This is created on Thinkorswim, and our level 4 members actually get this live on their on Thinkorswim, and our level 3 members get our broadcasts of these live charts also.
Okay.
So that's a look at the S&P 500.
These cycles, Steve, at the bottom, it's part of Thinkorswim's charting package, or
Actually,
stuff.
This is simply a drawing tool. In here, I can go to drawing tools and go to these cycle lines and just put them in here, as you can see. So it's a guide, a drawing tool. It's on Thinkorswim. It's on many other platforms. Many people use TradingView. It's variations of this around TradingView. Again, it's not an indicator. You have to do your own analysis on these charts and look for these repeating rhythms. All of our significant charts have this analysis on it. I heard you guys talking about the dollar and yen, of course. Let's just go up to 6E so you can see what this looks like on the yen chart, right? On the euro chart right here, and you could see how the cycles formed that head and shoulders top. We had projected down to that head and shoulders measurement. On this timing, you see the low coming in right here and the declining phase all through that period. It was a perfect touch of that measurement. And we actually believe the dollar is in process of topping right now, and the euro is in process of bottoming right now, which should
Could we get another shakeout under these lows?
Well, the shorter term pattern is suggestive of the fact that there could be one more shakeout coming. And if you look at that date, it would be right to about the end of the year. And then that would give you a test of the high. Of course, the inverse correlation to this is the dollar. So if I go to $DXY, you'll see that the opposite is occurring. These patterns are suggestive of getting up into that wall of fib extensions one more time on the upside. We had looked for 96.30, and then we raised our estimate to over 97, which it basically got there. We think this is a topping process in the dollar and a bottoming process in the euro going on right now. You can see, looking at our slim ribbon right over here, that this is still bullish and maintains being positive. And now we're getting this little green arrow on the bottom, which is a momentum indicator resumption. That tells us that it's likely that we're going to try to get a test on the upside in here. Okay. And then that would be the opposite, of course, for the euro, because they're 57% weighting.
Okay, so while the dollar is in a peaking stage, can I assume that with the dramatic sell-off we've seen, especially in silver and gold is heavy as well, that we should be looking for cycle lows in either of those?
Well, I'll tell you that my belief is that the silver and gold market are in an extended corrective period, which is pretty mild, that is likely to continue into the middle part of next year. I don't think we get any upside breakouts. However, this silver chart, as you can see, it has our complex analysis on there, points to a bottoming going on in silver for the short term. So it is reasonable, once I have this anchor point here, I'd be projecting up into the area of about 23 and a half for a bounce. But the longer term patterns are still suggestive right in here. And you see, getting down to this is the weekly chart, and the fact that it got down to the 78.6% retracement into that major support area is a warning that rallies will likely not be able to hold up. Now, if you look at our momentum indicator, look where it turned over right here, the Aslim reversal scout. That gave you this negative decline through the minor cycle. Here's where it turned over, gave you the decline through the dominant cycle, and it is turned over here already. So this tells us that any rallies in here all for the next couple of months are very likely to be false. And our longer term perspective points to a low in May. I think it's in May for silver, which says that all of this, this long corrective period that we're seeing right in here, or this flag formation that you see on this chart, is suggestive of continuation of that corrective period. See this dominant cycle on the bottom? I have a message right there that aligns with the monthly trough in June of 22. So that, all of this corrective period, or this big flag, I think continues out into next year. And then the big move that people are looking for, and I'm accumulating silver very slowly, physical, because I think that, silver could very well be a $40 to $50 number sometime next year, but late in the year. It has to get past this corrective period. Gold, has been in the same correction since almost 2100. And that, after this massive move that comes from 1,000 all the way to 2,100, it's in a correction, and it's a pretty mild correction. And this one actually points to a little bit earlier low. This is May 8th of next year for that corrective period. So we actually think that in rallies, gold is a sell in here. And the correlations between gold and the dollar are breaking down a little bit also. So I don't expect that we're going to be able to see a lot out of gold. You see this red resistance area. We're looking for a bounce in gold, and that would be from about 813 up to about 838. That would be the resistance area. And on the daily chart, you can see, look at the beautiful alignments of these cyclical patterns. Each of those yellow zones, the corrective periods called for declines, and they came exactly. And right now we are in a bottoming area in the gold market, where we should get a bounce into that area over that 813 area, but it's not very far, and it shouldn't be very sustainable based on what we're seeing in here.
Okay, so we've had a $13 decline in WTI, Steve, and everyone was bullish. We had backwardation. I'm going to tip my hat to me on that one. It worked out pretty well. I'm thinking that there's another rally in crude, and that this might be pretty close to a buying opportunity now.
Well, that might be the case, but you see that it's down there through the 78.6. And you see that little negative warning on the momentum condition that occurred 3 weeks ago. We have been warning our subscribers for several weeks that the gasoline market, which broke down earlier, had been warning that the peak was in place. We had originally projected to 92 in the oil market. And then when the breakdown in momentum conditions changed, we warned everybody that the top was in place.
92 is off the table now.
Off the table until maybe sometime next year. I don't care what OPEC Plus does right now. It doesn't matter. The conditions are such that, if you look at the previous time right over here where momentum condition turned down, you see that red arrow. The decline was through the trough here at the bottom of the cycles. In this case, that next trough doesn't come until February. So that says that the rally, which makes sense that it would come in a rebound, which that's 72.5, that's around 75. Well, that could happen. When I look at the shorter term pattern right in here, you can see there's a minor low due right here in the next several days, and you could get a rebound. But again, 72.5 is a place where you have to start looking that it's going to be in trouble. Look at the slim ribbon in here. You see the bottom. This is the green reflection of the slim ribbon PO and the positive indications that you had and the inertia as it was widening and moving up. Right over here is where we got the negative signal, and this turned red, and momentum and conditions in here are horrible. And a rebound can come, and often the slim ribbon is support or resistance. And there's that area where it's likely to be a lot of of information on there. So this is, what cycle analysis looks like, and it's made up of multiple time frame analysis that each of the longer time frames creates a dominance, and you get messages out of the interactions of the different time frames. We have 4 analysts on our team right now that are experts in this, and we're probably some of the only ones in the world to do this style of analysis.
Okay.
It looks very complex when you look at it. However, once you really get the eye for it and you get attuned to it, it makes a ton of sense.
Okay. Is there anything else, Steve? You're from Chicago, right?
Yeah.
All right. So you have to be paying attention to grains.
Yeah, of course.
And I'm curious, I look at DBA and, remember the old days, Steve, when the chant from the CBOT was beans in the teens? Well, I mean, they've accomplished that several times since our earlier days. How did they look to you? They've had a massive pullback and they look like they're trying to make a move again, the beans back to the upside.
I happen to put up wheat to start.
Yeah, it's been the strength, right?
Because wheat has been the strongest one of all. Yeah. And here you can see, it's the momentum. Actually, you can't see that little line is still on the strong side. The break that we had is a warning. And look how it came up and tagged those fib extensions, which was just fabulous. And then you got the reversal. Wheat to me looks like it's done, and there's a corrective process out into those 2 vertical lines that you see there are the time range for that low. So it's somewhere out January to February where the next low is due. So actually this should be probably extended down to that next support or the bottom of that right over there, where that low should be somewhere in the 770 area. For the wheat market, it's not that far down, but this is a warning of a peak in there. Now, I happen to like the corn action is a little. I'll get to beans in a moment. Okay. The corn action is, while it's a little toppy and in resistance, is a little bit stronger, I think. So, I mean, if I were to do a pair, it would be long corn, short wheat. Looking at that, the bean market is kind of middle-ish compared to these right in here. Now, this has our colored phasing in there, so it looks a little bit different because I do this on some of our charts for instructional purposes. So you see that soybeans are in the 3rd week of the next rising phase. However, the decline has just been, pretty relentless. And you see this cycle low right over here where this went negative. Once it got under there, it turns this red and it tells us it's likely to decline into this time frame, which it did. Now we're in this rising phase, and you see that the high was made in the 1st week off the bottom. I'll blow that up a little bit so that you could see that a little bit closer. The fact that that is the 1st week off the bottom, the probabilities of that being the high of this rally are less than about 10%. Yeah. That means that high right there is likely on a short-term basis to be exceeded. That would take you up to these resistances about $13 up to about $13.30, let's say, on this intermediate pattern right over there. The daily pattern that we look at right here is actually, you can see there are 2 projections in there because we don't know if it's going to take the upper track or the lower track, but this gets you up to about 13 and a quarter right there. And what it might do is create what we call a basing cycle in here where it comes, it rallies, and then, but it doesn't take out this low. It holds on and then begins to move up. I would say that around the beginning of the year is the most favorable period for beans. And I would say that based on the sum of the evidence that we look at in here, beans look like they're going to get a bounce in a downtrend is what is suggestive to me. And that bounce very likely into the low 13s based on what I see here.
Appreciate that. Look, why don't we wrap it with yields, with the taper going on and some risk off happening here. Yields have come back in. The yield curve is flattening. What's your view here?
Well, the first thing I want to say is that what I said to my subscribers about a week ago is that Now that Powell knows his job is secure, there's going to be a tone change because, the fact that he has dumped the word transitory, he doesn't own up to the fact that just means he was wrong. And he's been wrong, and the Fed has basically been wrong, and everything they've done in here about this massive, great experiment since 2008 has been wrong. So the likelihood of inflation being a big problem they're looking at right now, I think that's actually wrong also. But in the meantime, they're going to try to catch up. They've got to try to do some normalization because their toolbox, which they say is extensive, is really not. They can't keep doing QE. You're going to keep getting these inflationary whiffs, which I think is all in the context of a large deflationary process that's going to go on for years. But you get these whiffs of inflation, and you're going to get these whiffs of time when rates try to go up. And I think that we're facing one of those pretty soon. So the next thing that we'll look at in here, I'm just going to start out with the TNX, which just shows you the remarkable cyclicality that we look at right here. So I'm going to look at the cycles right in here. And the cyclical rhythms in here are phenomenally good. Let me just change this to the updated one. And you can see that right in here. I actually think that yields are about to go into a brief period of weeks where they're basically range bound. And we'll like to see that between, I'd say 1.35 and 1.6, something like that, back and forth in here. But you'll notice where where yields point to the upside in that next cycle that you see right in here. That is
Christmas on.
That is, I think, a period, and it might be earlier than Christmas, that we're going to get a very large upside in yields. I'm going to switch to the TLT because it's got a very busy chart here with all of the cycles from all the 20, 30, 10, 20, and 30 on the bottom in here. They all
TLT looks like it wants to break out to the upside.
I know that it looks that way, but look where it is. It's at a point where there's massive resistance, and there are 3 cycles that are pointing to the downside. Whoops, didn't mean to do that. There are 3 cycles that are pointing to the downside in here that will take effect sometime in a matter of weeks. The 10s, 20s, and 30s are all pointing to a large decline. And that's where I think we're going to get that big pop in yields out into February. I think we're going to see one of the biggest fast downside trades in the Treasury futures that we've seen in a long time. And our longer term projection is in alignment with this very significantly. Our monthly projection in yields points similarly to this. So we're looking for a break in the bond market and a big upward pop in yields, and potentially getting the 10-year up to about 2.2 sometime next year is what it really looks like to us. So the TLT really tells the story. There's a short-term pattern right in here that you can see that it's moving up into those cycle peak resistances. It could get through there and hook everybody, but there is a lot of downward pressure about to come into the market in Treasuries, and that would be upward pressure in yields. And I would say that would come in a matter of a couple of weeks, probably.
What a great presentation, Steve.
Thank you.
You're an excellent technician. I love your work. I'm so glad I reached out to you on Twitter and talked you into coming into a small venue like ours.
Yeah, well, glad to do it. I hope we share it with a lot of people, and the people that are watching this do check out our website at Ask Slim.
Why don't you show it, Steve?
Go ahead, sure, I'll show it. Let me just get that up right over here. Popping the wrong things up.
A lot of coverage, a lot of detail, a lot of information on every chart you show.
Yeah, thank you. This is AskSlim.com. What I want to encourage everybody to do is to click on this Save 30% or more. We have a great year-end special that we do. It's the lowest prices of the year. What we do is we give I'm just going to click on this really quickly. What we do is we give a special where if you sign up for one of our special prices, we will send you back an Amazon gift card. So here are the 4 different gift options. You can give the gift to somebody who loves the markets, or give the gift to yourself and try it. What's really good about this is that it's a non-recurring membership. We just want you to get a look at what we do. If you take our level 4 membership for 3 months, we're going to send you back $100 Amazon gift card. Take our level 3 membership, we're going to send you back a $50 gift card. So we cut some of the cost down for you for taking this non-recurring special that we're giving. So that's at AskSlim.com. And we have just a huge amount of information. What I shared with you today so far, we basically teach. And I have a workshop with 21 video modules on how to do cycle analysis that took me a couple of years to prepare. So, and tons of content that we put out there every single day. So we do live broadcasts with our proprietary indicators. And a tremendous amount of things that I have created. If you become a level 2 member, you're going to be able to get our 600 video library, where I've done tons of teaching on all aspects of engaging in the markets as a trader or an investor. So that's AskSlim.com.
Is that the way you prefer to teach, via video instead of live?
Well, we are now bringing in more live things, but it's through our Discord channels that are coming online and stuff like that. I used to do one-on-one coaching with people, but I don't do that anymore because I'm writing a book and I do a lot of analysis, and so there's not a lot. It takes
a lot of patience.
Yeah, not a lot of time to do that. Plus, for 20-something years, I've been certified as a personal growth facilitator and in emotional intelligence. So all of the work that I've done, and I have many videos on the psychology of trading, has been on putting that all together. The psychology of trading, the personal aspects, along with the technical side.
You help people change a paradigm that is perhaps getting in the way of their trading, if they were brought up with the concept of scarcity rather than abundance.
Right. They hold on to old messages, and I want to reframe them or help them reframe that so that they act in ways that are confident. So, but I probably have 30 videos on the emotional side in our library. So it's really good stuff.
So if you have some type of mental or psychological problem, you could reach out to Steve. I'm not sure what level he'll put you on the couch and diagnose what's wrong. He doesn't prescribe any medication, but I think it's part of it, Steve. Just like real estate's location. Trading is psychology.
Yes, absolutely. If you're not in the right mind frame, no matter how good your plan is, you're just not going to execute it.
Amen to my trading warrior brother, Steve Miller. Thank you, Steve, for being with us. Happy Hanukkah, happy holidays.
Thank you. Same to you.
I'll keep you. You want to stay in the rotation, buddy? I'd like to keep you.
Sure.
All right. So thanks again, Steve.
Okay.
All right. So that's
a wrap.
That's a wrap, everyone. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow. Adios, everyone, and good hunting the rest of the day. You could join the team in 14 minutes for the morning edge. Make sure you shaved. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.